Hello, everyone. Welcome to the Market Breadth. I'm Dr. Duru, and I am going to review a be ready kind of day in the stock market. And I'm going to end off with a key indicator that confirms the bearish undertones in the trading. So let's start off with the big feature of the day, which is IWM, the iShares Russell 2000 ETF, and this is the ETF of small caps. You will note that it lost a whopping 4.1% today. The big news of the day was inflation came in hotter than expectations or consensus. I wrote about that in my Inflation Watch blog, and I put a link to that in the captions. But anyway, notice the magical technicals that unfolded here. The buyers, or such as they were, stepped up to defend support at the 50-day moving average, which is this red line, which happens to be converging with the bear market line. So it's a very, very important convergence of support. And you could argue that there's also a small convergence with the 20-day moving average, uh, which is this dotted line. So it's kind of a triple convergence. But anyway, a very big test here. And it was dramatic and abrupt, of course, because IWM was about to break out here. Now, I want to go through a bunch of quick charts that tell me, or should tell us, how much of a be ready kind of day it was. So let's start off with my favorite be ready stock, which is Caterpillar, CAT, CAT. And as readers know, I like to fade Caterpillar as a hedge against bullishness. And if I'm bearish, I just go ahead and fade it. So this earnings move gave a perfect opportunity to fade. You can see that it soared or gapped up to, what is this, 335, and then just sold off the rest of the day. And then it's been losing momentum ever since. I opened up a put spread, I think around here. So I was ready for this drop today to 2.7%. And actually, these two down candles were sort of a telltale that CAT was losing momentum and losing altitude and had turned bearish because created new post earnings lows. All right, let's keep it moving. Car Gurus. This is a stock that lost 5.7% today, gap down below its 50-day moving average. That is bearish. Now, even worse, if I zoom out here, you can see that it pretty much formed a double top, and this breakdown below the 50-day moving average confirms that. So I was really bullish on Car Gurus out here. Now, unfortunately, I have to be bearish. Well, I don't have to be, but the technicals tell me to be bearish. All right, now there were some other stocks that really surprised me. Let's see, WTS. This is a Watts Water Technologies. It plunged 8.7% below the 50-day moving average. And why I say it surprised me is because you can see people were really excited for some reason about earnings and really zipped this stock up the upper Bollinger Band, almost a parabolic move, essentially a parabolic move, which of course in and of itself is dangerous, but it makes you wonder what in the world were people expecting when the stock reports, when the company reports earnings and the stock turns around and loses 8.7%. And if I zoom out here, you can see this was a critical time for the stock because it had just made new all-time highs. So this is a very bearish move for this stock, even if it just churns for a while here. So I would watch out on that one. Let's take a look at WCC. This is a distributor and it's an industrial type company. And I figured these kinds of companies would do well in this market, even with the new inflation scare and rising rates, but it plunged 31%. I didn't look at the specific news here. I will later today or this week, but you can see that was an important disappointment for the stock because it was at all-time highs. So again, it's a be ready kind of day, right? You've just seen two stocks that were breaking out at new highs and just turned around and completely took their supporters and investors by surprise. This one is particularly gut-wrenching because it fell all the way back essentially to the last lows down here in one fell swoop. That's pretty devastating. Again, it's a be ready kind of market. You got to be ready so you don't have to get ready. All right, let's take a look at some others. I've been obsessing almost over Children's Place. Um, just as a reminder, this one plunged almost 50% or around 50% and then rallied intraday to about a 30% loss, 32% loss. And then the next day it rallied some more and gained another 31%. And I was lamenting missing this move because there were some technicals that should have told me to just go ahead and get in, but I wasn't even paying attention. Now you can see the sellers have returned because the day was so bearish. I mean, if you bought into this, you didn't even get a chance to get out even. Stock gap down and then just kept selling for the rest of the day, 31% loss. This stock now is officially very dangerous. I wouldn't even touch it. I don't see a technical reason for a rebound, and if you catch it, it's pretty much just luck. All right, let's stop with the bad news and look at some good news for a quick second. This is Dave and Buster's or Play. I've been a big supporter of this stock since the beginning of 2022, and insiders, oh wait, sorry. Yeah, 2022, and insiders were buying the stock. You can see that for a long time, it just gave a perfect trading range. So I would buy down here and then I would sell around these levels. And then it finally broke out. I missed this dip here. And now the stock is just on this strong run. I guess people are back to getting entertained at Dave and Buster's. And it didn't, it dropped 4.4%. It's cooled off now from this heated rally, but it's still looking strong. I can't get bearish on this, and I'll stay bullish and look for an entry point at some point. All right, McDonald's. Um, this one again is bearish. It gapped down for earnings, rallied back to the 50-day moving average, and then fell back and confirmed this line as resistance. So I'm bearish on that, and I have a put spread. Oh, big disappointment for the day. Teradata Corporation. It's basically a cloud server provider and cloud data provider. And I had written about this as a buy the dips. I can't remember. Sometime I wrote about this in Seeking Alpha somewhere before this earnings, I believe. Sorry, I can't remember. But regardless, of course, I bought my own dog food. So I'm really hurting after this 22% plunge post earnings. But depending upon what I see when I read the earnings, I actually want to add more because I really think this is just one of those cycles where Teradata is falling out of favor. I'm zooming out here just to show how crazy choppy the trading in this stock is. So, it's back to levels that it was seeing, in 2018 and 2017, 2018. So I'm keeping an eye on this for a new entry point. So let's see what happens. But I do want to wait for a little bit. I want it to close above the intraday high. Okay, what's next on the list? Ah, yes, good old ARK Innovations. This one also had an important move. It broke out. It even confirmed the breakout, but you can see it was well above the upper Bollinger Band. And then today it lost a whopping 5.6% and is back into bearish territory under the 50-day moving average. So it looks pretty good for my covered call position to go out this week with the call expired. And I mean, I've written about my trading strategy here. I won't repeat it here. You can check out the blog at drduru.com/122 to find out more. And of course, search on the ticker symbol. Okay, I know I have at least one or two more here. Shopify. Again, you got to be ready. Check out how this stock was rallying hard into earnings. Now, granted, right before earnings, people got a little bit of cold feet with this 1.8% loss, but it still only got back to the upper Bollinger Band. And earnings didn't treat people well. The stock lost 13.4%, and it even broke below the 50-day moving average. So I am going to be looking to see for a lower close whether Shopify has gone from bullish to bearish. So I will be watching that one closely. And let's see, I'm pretty sure I have at least one more before I do the big reveal on what's confirming the bearish signals. Oh, yes, ARM. I talked about this in my last video. Oh my gosh. This was one where, I was ready, but not ready enough. The covered call position, of course, is in the red. This 19.5 5% loss is much bigger than I was anticipating for the week, much less for a single day. So, I'll cover the call tomorrow and then go from there and just see what happens. Still looking for the stock to churn for a bit and cool off, but not cool off with further plunges. But given this is a be ready market, we'll have to see. Now, the last two, the VIX. The VIX has been a non-story for a while. It finally surged big time today, got as high as 18. And the thing that I'm noticing, and this is the big caution for all of us, is that the VIX came down nicely into the year end, but check out how it has failed to come any lower all year long, which means it has this very slight uptrend. This is what I call a be ready yellow flag warning. The VIX wants to go higher. Today it went higher, but the VIX faders, as I like to call them, brought it all the way back down. So it's possible some of the steam, the bearish steam, has already been let out of the market, but this is something now I'm going to be watching and putting back onto my radar, the volatility index. And then finally, my favorite technical indicator. This is the final confirmation of bearishness, reconfirmation of the bearishness that's in the undertone of the market. It completely plunged from around 60% to 44.7%. This is AT50. I like to call it AT50 for above the 50, or the percentage of stocks above their 50-day moving average. This is at a key point of market breadth. It is in a downtrend. It was just about to break out of that downtrend and then bam, came right back down. So as far as I'm concerned, the undertones of the market are still bearish, and you need to be ready. That's the theme. All right. So let me end it there. If you have any questions, just put them in the comments. Otherwise, subscribe to this channel for more videos. Check out my blog at drduru.com/122 for more timely updates. Well, sometimes I go from video to writing, just depends upon the action of the day. So anyway, thanks for checking this out, and I will see you the next time.